welcome to Options Tender's weekend update. Thank you for joining me. If you love this information, hit the notification button so you can get these videos every single morning and after market, also on the weekend. Subscribe, hit the like button so we can spread the wealth, spread the knowledge, and help other traders out, especially the new ones. All right, so we have the weekend update, the weekend update. We have the breakout to all-time highs. This market is on fire. Now, what's happening inside? We're going to look at our wave count MACD and why we think the market is going much higher. Okay, so let's get into it. We're going to start off with a weekly chart today. So we have our Elliot wave count 1, 2, 3, down to 4, and we are working on wave 5, and we don't think we're stopping here. Look at this resistance, this angled pivot that we're bursting off of. I mean, we tried to come down. We hit the 8-week MA, and we took off from there. So this candle is super bullish. And to layer onto it, we have the MACD just turning right back up. It's extremely bullish here on the weekly. So let's check out the daily, see what's happening down there. The trend is our friend. We will dig in deep here, zoom in. We are Elliott wave 1, 2, 3. We think we have much further than this 3 area. So right here we have wave 1, 2, and we're working on a 1, 2, 1, 2, and on a minute wave 3 at this point. Okay, 3 of 3. So we want to finish this wave 3 with a 4 and a 5. Okay, I know that sounds confusing, but we'll do this day by day. So again, follows every single day. We'll check out the wave counts. We'll check out the MAs. We're extremely bullish. Look at us lift off of this resistance turn support here. 8 MA is pointing up. Our 20, 50, 100, and 200 all curling to the upside. This is as bullish as you can be. So we have our MACD. We were cautious a couple of weeks ago. It took some time to reset, so we were cautious, but we were making higher highs and higher lows as the MACD was resetting. That's why we're grinding. Okay, we didn't have the momentum behind us, but now we're curling to the upside. We made a bull cross, a beautiful thing. So now the momentum is to the upside. You know, I was cautious last week because of this. We didn't have the cross yet, so we wanted to make sure that we weren't faking anybody out as we grinded to the upside, and we were just gonna reset ourselves, maybe take a big dip with all the news that was happening. Well, that's all behind us, and we'll talk about that a little bit later. But so how is this happening? Okay, we're calling it the tech takeover because over here in the RTY, this is our small caps. The small caps for the last few months has been leading the market, just extreme. We have the bullish counter here. We have the 1, 2, 3, 4, 5 for the Elliott wave count. We believe that 5 is over. So we think the small caps have to rest. Well, if the market is going to continue higher, you need something to keep it going. In the last 10 years, the NASDAQ has been those big tech, Apple, NVIDIA, Amazon, Netflix, all of those, the FANG, some people call them, monsters of tech, Theo Trade calls them. Those guys have brought us this far, but the small caps had to catch up. So now what happens? Here is tech. We've been grinding the whole way to the side. The whole time that the small caps were exceeding to the upside, the tech companies were just grinding to the side. And now they finally made that break. Again, check out this MACD. It's crossing over right now. It's touching at this moment. So we're definitely going to check out, see what happens in the next couple days of the new week. But this is it. I do believe the tech companies are going to lead the way from this point. So that's our tech takeover. Now we're constantly looking at the wave count, but we're going to go to the ES so we can go on a smaller time frame to check out our week coming up and what kind of wave count we've had. Now, we had to work some wave counts over. I didn't quite understand. We're new at Elliott waves. I didn't quite understand what was happening in this slow grind to the upside. This typically wouldn't look like this. Well, we didn't have the momentum behind us, so we have this new count here. We're on wave count 1, 2, and this is a big 3 that's happening that's starting to curl up. But let's get closer on just on the real small time frame so we can look. We have our wave 1 down to wave 2 up to wave 3, and wave 3 is just about over, we think. So we may have, in the next day or two, we may have to start correcting to a wave 4 to continue on up to the wave 5, which would complete our minute wave 3. So just watch with us every single day. This shows a bearish divergence is possible. So we're crossing over to the bull side, but as we get higher, we're not sure that the momentum is going to make a new high. That means we will create a bearish divergence, which will key right in with our corrective wave 4. So we may go up a little bit, retest this 38.25 area, or we may come all the way down to 37.75. But we're gonna make higher highs and higher lows at this point. If that market structure breaks, that's when we know that something is wrong and we'll have to recount our Elliott waves. So market efficiency. Let's move over lastly to the expected move for the SPX. All right, we're going to move, what do we have? Expected move here, and we're going to go on the daily just so we can get a better view of this. We'll tighten up the screen, and once again, you see us break into the upside. I mean, that's just a hell of a week. We thought we were going down at this point, but moving on up. So to start off every single week, we frame out our week, okay? How do we do that? We go to the trade tab, we look at the week out next Friday, and we see that the implied volatility, the options market is expecting us to move plus or minus 73 points. And all we do is we chart that onto our, I do this by hand. There's a way to do this automatically on Thinkorswim, but we do this by hand every single week. There's 73 points to the upside. This is where the week begins. And there's 73 points to the downside. Now, the market is super efficient, and from back here for quite some time, since looks like November, we've been hitting the upside, hitting the downside, hitting the upside, hitting the downside, getting real tight in there, but touching each side. And then we had an expansion of volatility, and we still touched the bottom of the expected move and kept in the within the frames, and almost touch the upper end as well. So super volatile, real crazy. Love the action. It's great for a trader. But we noticed last week we were in the 80s, plus or minus 83, if I may. And this week we're in the 70s. So why is volatility contracting now? Well, you notice the all the news of last week, the FOMC, the presidential election, all that is behind us. So what volatility, when volatility starts to go down, it's typically because the market is going up. Okay, so with our volatility contracting, we may see a continuous grind here for some time, and so we may expect to hit that upper move again and possibly again and again. So we'll follow this week by week. I don't want to predict anything, but do expect some moves up and down throughout the week. I'm not saying this is going to go straight up. That's not typically how things work. And notice one more time, I'm going to emphasize this. This is a bullish crossover once again. So let's follow the momentum here, okay? We don't want to go against the frame. We did put on some put protections last week, but we're going to take those off, and we're going to continue to monitor the market every single day. So sorry so lengthy this time, but we want to, for all the new traders here, we want to make sure that you see what I see, and that we trade this market well, and that we don't just think we're going to move up or just move down. We want to interpret this every single day to see where we move next. Okay, we want to be smart trading. So hold on to those bullish bets, and we'll throw on and we'll check out Monday to see what happens next. Okay, thank you for joining me. Thanks for joining Options Center. All right, bye bye.